Hello guys, Mike Fibonacci here and welcome to another video. Today we will see some of the trades I took last week, and we will also take a look at market structure and time frame analysis, correlating time frames, daily, 4 hour and 1 hour, and also 15 minutes. And if we have time, also we will take a look at EMAs. Enjoy, and be sure to subscribe and hit the like button, and also check out my other videos. So what we have here is NSD USD dollar. This pair is one of the pairs that respect market structure very well. It has little to no manipulation whatsoever. So let's go on from the higher time frame. We can do this from the weekly mostly, or from the monthly, but in this case let's start from the weekly. So as we can see here, the market has a strong support. Hold on, just let me just take a look from the higher time frame, from the monthly. So what we can see here is price having a strong support, and what price did is, whenever price came into this area on the monthly time frame, it has a tendency to bounce back into buys. So we identify this as a strong monthly support area. So whenever price hits this area, we are taking a look at opportunities to buy. So notice how also it doesn't break any this support area with its body, with monthly body, with body candle bodies, but it just touches with the wicks. Yes, so if price breaks this major level of support with the candlestick body, so we will take a look for opportunities to sell. But whenever price comes to this area, major support area, we will just look for opportunities to buy. So this is one input. So we'll take a look at the lower time frame, from the monthly to the weekly. So price here has been trending upwards, yes, for the last 4 weeks. Price has been trending upwards 4 or 5 weeks, or more than that. So let's first remove these drawings. So price, as we can see here, was trending downwards, straight downwards, hit this major level of support, and started to push back up, and we have a little pullback in the weekly time frame, and then price started to push back up again. So we will take our Fibonacci here, and then, as I said in my other videos, we will plot our Fibonacci from the swing low to the swing high. Yes, so this is how we plot from the swing low to the swing high. So notice how on the weekly time frame, price had pulled back to the 0.5% of the Fibonacci, and then started to push back up, and then hit our first TP, which is a 0%, and then our second TP, which is Fibonacci extension of negative 0.382%. Yes, so once it hit, or once it break this structure with a body candle, so our next target will be this Fibonacci extension. So we are looking for the price to go on and touch these TP zones. Yes, or we expect price to continue pushing upwards, so we expect an uptrend market structure. So let's go on to the lower time frames and make analysis. So so on the daily we have this. Once price came to the 0.5 level of the Fibonacci, it started with a strong push on the upward, and then started to have some pullback. So plot our Fibonacci again on the daily time frame from the swing low to the swing high, and we can see here that price is just testing the 38.2% of our Fibonacci retracement. So notice it doesn't break the 38.2% of Fibonacci retracement with the body. It's just testing with the wicks and started to push back up. So again, let's go on to the lower time frames. So price here, as we can see, was on the 4-hour to make that pullback on the daily. So whenever there will be market structure within a structure, so there is a trend within a trend. So we can see here that for example this was the daily upward trend, yes, on the daily. But as we can see here on the 4-hour time frame, market has been doing higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Yes, so it's once it hits this point, there was a market structure shift and price started to go downwards, yes, in order to have that pullback on the daily time frame. So price started to have a downtrend. So there was a trend within a trend, yes, on the 4-hour time frame. So once it hit this 38.2% and started to push back up. So what we did here is, so whenever there is from the 38 point, it started to push back up. So do we just buy from the 38.2%? The answer will be no. So we will have to confirm first before we get into the buy areas. So first let us confirm. So we will just do a confluence, yes, market analysis. So what confluence means is that using all our knowledge to analyze the market, yes. So this will be a trend line, so into the downward. So once price breaks this trend line, started to have some kind of pullback and then started to push back up. started to push back up. So what we will do is plot from the swing low to the swing high. We can see here that it respects the 23.6%. It respects the 23.6% of the market structure. But do we buy from here? The answer will be still no. So what we can see, or what we can see here is that once price breaks this level of support, we will start to look for buys once price has a pullback. Yes, so the reason we waited for the price to break the market structure twice is to confirm that the market is heading more in our way. So once it broke this structure, so again we will plot from the swing low on the 4-hour time frame to the swing high. Yes, and then we will wait for our pullback. So price went from breaking this level of resistance, break this structure, and started to have some kind of pullback, tested this 38.2% area of Fibonacci. So what we will do is once the price is in this area, we will go to the lower time frames. Yes, we will go to the lower time frames in order to find buy opportunities. So let's go on to the lower time frames. So this is the area. Yes, so you can clearly see here that price having a support area on the 38.2%, having that push from the 38.2%, having a little pullback, and then started to have pushback. Yes, so what we will do is we will go further to the lower time frame in order to have buy opportunities. So on the 15 time frames, we can clearly see that market structure has been shifted from having lower highs to lower lows, to higher highs and lower lows. So we can buy from any of the 15 time frames. Yes, for example, we just don't buy from the levels. Yes, we wait for some kind of market structure shift, so we can buy around here, so these are a opportunities for buys. Or we can just take buys whenever our aim is cross right around here. So our first buys opportunity will be around here, stop loss below this level, and then targeting the 0%. So it is a good 1 to 2.4 RR trade, and then our second will be whenever our aim is cross, which gives us more confirmation that it is bias. So we will do, let's say here, stop loss below this level, or and targeting our 0%. So it is almost 1 to 1 risk to reward ratio trade. So this is how we correlate from higher time frames to lower time frames. NSD USD is a good pair which respects market structure very well. You can do your own analysis, and this is what I have for you today. Be sure to subscribe and then check my other videos. Thank you.